Hey everybody, hope everything is going well for you. Hope everything is going great. I know I just repeated myself, but it's okay. Today we're going to give a year-end roundup of my investment in Cardone Capital. So this is a relatively divided topic within my community. Some people are really interested in seeing what happens with it. Some people are thinking I got completely scammed. So regardless of whether or not whatever camp you are in, we're going to talk about it a little bit today and show you just what has happened to my investment in 2019 and what exactly I'm invested in when it comes to Cardone Capital. So let's just hop right into the investing page. So here's the investing page. So if you actually open up and you were to sign in, if you had an account, this is kind of what it looks like here. And you can kind of see there's a lot of information on here, like capital committed, capital actually contributed to whatever I'm investing in, the capital balance, and what I've actually received with respect to distributions specifically in 2019 so far. So you can see that basically I've been invested since July. I initially put my funds forward in the May timeframe for those of you guys that haven't necessarily seen what I've done so far in Cardone Capital. And here is really the distribution graph. So hopefully I'm zooming in for you guys at this point, specifically focusing on this distribution graph. So you can see at the moment it only goes from 0 to $70, and I only invested about $15,000 into Cardone Equity 5, and we'll get into what is in Cardone Equity 5 in a little bit here. But you can see that generally speaking, everything's been relatively flat since the month of August. So since I was invested in July forward, I obviously got my contributions or my distributions starting in August. So actually, we just finished December up, or at least it finishes today when I'm recording this video, and I'll actually get my December payment on the 10th of January. So this December payment that you're actually seeing here is for November and vice versa. So you can see that although I started in July, I didn't get my first payment until August, because really you have to go through an entire month before you actually start getting any sort of cash flow for the month before. So that's that aspect of things. Nothing too crazy. Like the, I guess, biggest thing that you could see within here at the moment is I've already received $281 in terms of distributions that went directly to my checking account. And what I do with that, generally speaking, is just put it right back into my individual brokerage account or get it ready for my IRA, in the case of the fact that it's tomorrow will be the first day that I can contribute to my Roth IRA for the year. But some of you guys might be like, well, you can't really take the effect of compounding interest, and that's, or compounding dividends, or whatever you want to call it. I agree with you. You know, I would love to continue to reinvest into the said property, but unfortunately, the cash flow goes directly either to you by check or by, direct deposit into your banking account. So with respect to automatically being able to reinvest, I'll just have to take this money, which I generally do, and put it into my brokerage account and invest it that way. Um, Now, just how much have I actually received back in my investment with respect to how much I invested? So I invested the $15,000, but this half of the year, I actually was able to get, I guess, like just under $282. So divide that by the 15,000 I invested, it's, just under 2% in that respect. So this was specifically for 5/8 of the month, or 5/8 of the year. So divide this by 5, multiply by 12. So that's about a 4.5% return, which is about what I was expecting. Because if you just take the 5625 and divide that by the 15,000, um, multiply that out, you're getting about just under 0.4% every single month. And if you multiply that out, you get the 4.5% as well. So if you actually annualize this 5625 times 12, you get the 675, and you're able to get the actual same as well, the 4.5% or so. So at the moment, just based off of this, the run rate is looking about $675 a year, which I'm supposed is supposed to be tax advantage, and I'll make sure to keep you guys updated on that as well. If once I actually get my K1 forms, if everything actually does end up being tax advantaged. But yeah, you can kind of see that that's really all that happens at the moment. It's really just the cash flow coming to and from the account. Another cool little thing is you get little updates with respect to how the funds have been, or how the investments have been producing over the past 2-3 months since the last investor report. So they actually just released last month the investor report for Q3, and I expect in January, February to get one for the end of the year for the 4 properties or 5 properties that are invested in Cardone Equity 5. And I actually thought it was 4 properties, but I just learned today that there is a 5th property that we invested in, and kind of give you guys an idea. And there's a link in all these descriptions down below. Now, when you're investing with something like Cardone Capital, you're not investing in every single thing that, say, Cardone invests in. You're investing in specifically what that fund invests in. So think about like a company or like a Wells Fargo might be offering a portfolio of different mutual funds. What I'm kind of purchasing is one of those mutual funds, if that kind of makes sense. So in this case, I'm purchasing one of the funds from Cardone, specifically looking at one of, or a multiple of, different real estate investments. So in this case, it's a place in Delray, which is Delray Beach, Florida. There's a place, whoops, just switched something out, but there's some place in Sawgrass, which is another 500 unit apartment complex, which is pretty beautiful looking as well. And I think that's also in Florida. There's the Stella property here in Sugarland, which is one of the main reasons why I invested in it, because I've been living in Houston area for the past 5 or 6 years, and so very familiar with the Sugarland area, which is just southwest of Houston, and really liked this property in particular, which is part of the reason why I invest. Then there's 10X at Naples, which is also in Florida here. Beautiful property as well. And like I said, if you guys are interested in reading these a little bit more in depth, I can provide these links in the description for you guys. And then there's also the place that I didn't know anything about, but a place called Breakfast Point, which I believe is a 200 unit apartment complex as well, that had no idea anything about. Oh, sorry, 360 unit, um, which is pretty interesting. And another thing that I didn't necessarily know until rather recently. So not only is Cardone Equity 5 invested in these investments, but Cardone Equity 4, which is which is an accredited investor fund, is invested in these as well. So altogether, in combination between the two, I think they filled up about $150 million to purchase these, and it ended up being, I think, just over 2,000 units between the two. So what I thought was relatively interesting was that these units were purchased with interest only for the majority of them. Some of them are only for 3 years, and the other 7 years actually have principal pay down as well. But the fact that some of them are interest only means that the cash flow from these should be extremely high. Excuse me. The cash flow from these should be extremely high, but at the moment I'm only seeing about 4.5%, which has been relatively stable, and I'm not necessarily complaining about that. But I'm hoping that with the fact that these are interest only, over the coming months, it continues to increase over time. Another problem that I have with respect to what I've seen here is that month after month, the distribution doesn't really change at the moment. So I've had 5 payments now where it's all 56.25. And I understand that real estate is very variable. Sometimes you have capital expenditures or expenses or contractors that you have to pay. So I'm surprised that it's exactly 56.25 every single month. So that's something that relatively raises concerns to me, because I can understand if it was, say, like $50 at one month, $60 the next, 55 the next, just based off the fact that operating expenditures for managing 5 different properties, 2,000 units, changes on a month-to-month basis. So you have paint, say 2 or 3 units that are moving out and you need to renovate them, new carpets, new washer, dryers, what have you, and that would show up hopefully month after month. But this is boom, dead flat at about a 4.5% run rate for the year in terms of distribution. So really curious if in the future if it kind of comes up and down or if it's more variable. But that is that for this respective stuff. Um, and like I said, if you guys are more interested in seeing the data about each of these properties, $15,000 is invested in each of these properties. So if you were to invest that, I guess across the say three, of about 3,000 invested in each of them. Now, of course, some of them are more valuable than others. Some of them are $100 million properties. Some of them only have 200 units. Some of them have 500 units. So in that respect, I assume that that money is distributed, across these four different properties as a portfolio. Now, what ends up happening if, say, one of these properties is sold? I mean, that's to be known or to be, I guess, figured out in the future. But I will share this with you guys because this is public access. You can access this without a password, but there are some other numbers like the financials that are actually from Cardone Capital from the Q3 report that I won't share because I don't necessarily know if I have the capability to share that with you guys, or am I allowed to share that with you guys without, I guess, asking for the company's permission. So um, it is what it is. If it was publicly knowledgeable, or publicly, I guess, put out into the public, I'd be more than comfortable to do that. These are available to the public. You don't need a password to see these, so I'm more than happy sharing these with you guys. Um, but the other things you actually need a password to see, so I will withhold on that. But like I said, I love this beautiful Stella property here in Sugarland, Texas. Like I said, I have been living in the past couple of years, 2 3 years down here in the Midtown area of Houston, and so you have Sugarland just southwest, just a good 30 miles away. So really beautiful place. I have friends that live in Sugarland, and they absolutely love it as well. So um, I know I've been to the area that this apartment complex had been in, but I obviously have not been in this apartment complex itself. Actually, when I move back to Houston, maybe next year, if I move back to Houston, maybe it's a place that I could potentially live, which would be kind of funny. Give you guys insider updates on how the property is actually doing if I moved into it. But I think I'm looking more towards downtown if I were to move back to Houston in 2020, but we will see. But anyway, hope this was an eventful review for you guys, and hopefully it gave you guys an idea as to what is going on within Cardone Capital when you can kind of make a decision for yourself. But like I said, things to look forward to is that dreadful K1 that some folks are not interested in, to see if I actually get that tax depreciation that folks were curious about, and also if the distribution actually changes quarter over quarter or month over month once we get into say 2020 and the fund somewhat stabilizes after it is currently invested in those five different properties. So um, really cool as well. Thank you for giving me the inspiration to do this video, because otherwise would just thought I had the four investments rather than the five. So um, in with respect to the different apartment complexes that are invested. So anyway, I'm gonna call it quits, head to bed tonight, and I will catch you guys on another video. Cheers.